And this is you as a leader, you know what the target is looking ahead. You know where you are today, and you're seeing roadblocks that may be coming your way. And it's your job to have the wherewithal to prevent those roadblocks.
This is the Yield Coach Show, episode 42. Hey everybody, this is your coach Ian Brown. A few announcements. Yield Coach Capital has opened its doors to investors looking to multiply their money while working with yours truly and our varsity investment team. We recently closed our 170-acre Gainesville, Florida industrial tract, and our limited partner investors are on pace to make 2.5 times or more on their money. That opportunity is gone, but don't miss the next one. Be sure to join our investor list and never miss a deal again. You can join our investor list by the portal, which is in the show notes of this podcast. It's in our Instagram bio link, and you can also do it at yield-coach.com. If you join our investor list, we will get you the free gift, 107 questions to ask a deal sponsor, and a discount to our Employee to Entrepreneur video course, which is packed full of information and case studies to kickstart your investment success. Now is your time to take the field. I'm your host, Ian Brown. Every episode, we bring you dynamic entrepreneurs, real estate investors, thought leaders, and inspirational guests ready to open up, share their story, the good, the bad, the ugly, so you can learn lessons, gain advantages, and accelerate your own success. Very excited today to be joined by Iven Vian. Damn, that's a cool name, Iven Vian. Iven has been a real estate investor since 2007. He was a lieutenant colonel in the Air Force since 2001. He's the principal and lead sponsor of Anthem Capital, where they have assets totaling 1,500 units, maybe more, we'll find out. 125 million in holdings. He's raised 46 million in equity. Got an engineering and mechanics degree from Air Force Academy and an MBA from Toro University. Iven, welcome.
Hey, thanks, Ian. Appreciate you having me on your show. I look forward to it.
Yeah, man. Hopefully I got everything all right in that little hype intro.
Good enough, man. Good enough.
All right, cool. Well, just a little bit of background for the audience. Iven and we actually had the pleasure of meeting face to face, which is not super common with podcast guests. And we were at Race Fest 2023 this year in Kentucky. So talking about raising capital, getting jacked up, getting hyped, networking, had a good time. Yeah. We had a nice lunch together. Good to see you again.
Good to see you as well, man.
Let's jump into you got a unique background. I think we've had maybe one other guest with a little bit of military, but I feel like bringing that military, presence and structure, and I mean, you just you exude professionalism face to face. So tell us about your background and how you came to be this principal lead sponsor at Anthem Capital.
Yeah, absolutely, man. My background, I spent 20 years in the Air Force. I retired about a year and a half ago as the recording of the show. Flew B-1 bombers my entire life. And I was in an operation environment my entire life, which I'll kind of lean into a little bit here, probably later on in the show on why I believe that's important. But how I got into real estate, man, I went to the Air Force Academy, and I listened and I did everything that the instructors told me to do every day. They would teach you about mutual funds and how to max out your mutual fund. So basically, I put all my money I had in a mutual fund and went to zero overnight. I lost all my money and I was heartbroken. Ooh. I was like, man, there's got to be a better way to make your hard-earned cash work for you. And that's when I got interested in real estate. It happened kind of naturally. I was getting relocated from Rapid City, South Dakota, down to Abilene, Texas. And I was staying with my mother-in-law, and she said, hey, there's this lady down the street going through a divorce. She really needs to sell her house. And I was like walking my bags into the house. I just dropped them right there. And I went down to her house, knocked on her door, and asked her if she wanted to sell her house. And she said, yeah, I need to sell it. Long story short, I bought it for $33,000 that day.
Nice.
Got it rented, and I was cash flowing about $300 and paying myself back from that $24,000 I lost a few years earlier. And that's when the real estate bug came alive inside of me. I was like, wow, there is something to this real estate game. Not only did I create $300 cash flow, but I captured some equity and paying down my principal. I got some tax savings going on. I got capital gains going on. Like I'm earning money a lot of different ways than losing money in that one stock investment. So that's kind of how I got my start in real estate investing.
Man, the poor little lady down the street. That's funny. I think the first property, I've been in real estate 17 years, but I didn't really suck it up and start investing until about 7 years ago. And I think the first property I bought, it was like 38 grand. So, you know, we started with these beautiful little 30 something $1,000 properties. And I won't say I'm on your level. That's why you're the guest. You're the big deal. But boy, is it fun to get yourself financially free through something so tangible. You know, I do feel like whatever you're into that's non-real estate, whether it's like crypto or futures or index funds or whatever it is, even if you do your homework, I mean, there's really no advantages to play. Not that I see. I mean, look at your mom says, go down the street. There's probably a steal on this house. But
Yeah.
that does not happen. Actually, if that happens in the stock market, it's illegal. That's insider trading. So, there's real estate insider trading is legal, and you can do homework, and you can, like I say in the intro, you can gain advantages, and you can apply all kinds of different leverage. So, problem solving is key. I just don't see a spot for that in trading stocks and crypto. So, but going from that house, what was that like? Maybe what 20 trying to think about your timeline here, early 2000s or
no, it's 2008.
2008. Oh, so it was actually like, now was it like fall of 2008 or was it like, no, life is still maybe okay? Do you remember? Like, was the sky falling?
You know what? No, and actually, let me back up. That was November of 2007, right before 2008 thing. So I got in right before all that stuff happened, and I really want to get into what I do today, but I'll share a little bit of background.
Oh yeah. You're on the Yield Coach show. We bounce around a little bit.
Okay, cool. But like right after that, I ended up buying a house right next to the house that I moved into. It was a boarded up, abandoned home, and I searched down the owner through the tax roll. Same thing. I said I got lucky the first time. Let's see if I could do it again. I went to his door, knocked on his door. This big burly man with the shirt off came to the door and invited me into his house, brought me up into his attic office with one little dim light swinging on top of the table. And it was very creepy, man. He like had this piece of paper with, it was the note. He said, he just like pushed it on the desk over to me. He's like, hey, see that number on there? I was like, yeah, because that's what I owe the bank. It said like $71,500. This is boarded up, abandoned home with like nothing in it. And he said, if you want to buy my house, you need to pay me that much. I said, okay, I'll buy it for that much. Because I just thought in my head, it's next to me. I can make this work. Well, it didn't work. It drowned me. I went $80,000 in debt, overpaid for that freaking box. I didn't do comp study. I didn't have a mentor. I made a lot of mistakes, overpaid and over rehabbed. And I got a mentor after that. And realized, I learned all the things that I did wrong, and realized that mentorship is key, because you go and find people that have gone there, been there, done that before you, and you simply copy what they do. Being a military guy, I understand how to take instruction pretty easily. They give you the freaking blueprint. They give you the playbook. It's just up to you if you want to execute. And I had to start over. I had no money. And I had to start over. So I ended up getting relocated to Oklahoma City, where I live today. Saved up some money, hit the ground running, bought some homes, ran out of money, got my real estate license. And this was the game changer for me. My broker said, get my license. I got my license. The idea was I would sell houses on my lunch break and after work when I'm not flying airplanes. And I would literally go into these little neighborhoods around the base. A lot of military bases have good rental property around them. And I'd go in these little neighborhoods and open doors for investors. And I did that for 2 years. I ended up selling 99 houses in 2 years. Doing that. Made a crap ton of money and bought a crap ton of houses, built up a portfolio of about 30. My first client, Tariq Satar, who is my business partner today, we were in the back of another abandoned home underwriting a deal and realized it wasn't working out. I said, man, Tariq always wanted to get in multifamily. There's this 2-day event going on in Dallas, Texas. Come join me with this at this event, and let's see if this is something we want to get into. I went down to Dallas, went through the 2-day event, signed up multifamily, and we hit the ground running after that. And that was kind of the beginning of multifamily investing 7 years ago, March of 2016. To date, we've done about 3,000 doors. We bought about 300 million in real estate, bought 19 properties, sold 14, and it's been a great ride. And I get to do this full time now that I'm retired from the Air Force.
Man, you gave us a lot there. Okay, we'll go. I mean, first of all, my stats are all wrong. I read you in at 1,500 units and 125.
Oh, good.
Man, I was like, I halved you. I cut you in half. God, you sold a lot of them too. Good for you. All right, but I got to back up a little bit. So
do it.
You're talking about failures, and then like you like go right back to procedure and mentorship and like just getting on the right path. Man, because you're just so resilient. Because some people, it's not that common that you hear people fail within the industry and rise up within the industry. Meaning, like they might have failed like in another industry and come to a new one, but like for you to have like rise and fall within real estate and still push through and take off is awesome. So obviously, we both love multifamily. You're in it much deeper than me. I have a personal portfolio that keeps me happy, but you're doing it on a much bigger scale. So, how did you decide? I guess it was that kind of the mentorship, and I think the collapsing time is an interesting thing that we've heard in a mastermind we're both a part of for capital raising, and it's like, okay, I think there's something to that where like you're really writing a check to join a mastermind to replace time. Like, could you figure out some of this on your own? Let's just say, for argument's sake, yes. I think there's an argument that maybe you never would figure it out, but for all the haters out there on masterminds, I'd say at minimum, you're saving yourself difficult years of trial and error, where you probably have a high risk of fatigue and burnout because you're alone wandering at sea, gaining depression and not having success. But can you talk just a little bit more going back on that mentorship side? You went to the 2-day event. Like, sounds like that just like drew your arrow and just shot you out into the world of multifamily with structure. Because you strike me as a guy who you give Ivan a blueprint. It's over, baby. You give them the right blueprint, you're going to do it. You're an executor.
Yeah, the first mentorship program was where I focused on single family, and I got my single family game right, But in that mentorship program, they had the second day of the event, they had a multifamily teaching, and that's when my eyes were open on multifamily. I didn't have the mindset and belief at the time, nor the money. But I set my sights on multifamily. I knew what I wanted back in 2008, 2009, when I was still doing single family. And it just so happened that the apartment mentor with that first group started his own. And so I kind of followed him to his own. And, it's kind of like, because the first mentorship group, I had so much success in getting my single family game right. I mean, I was on the phone every day. I was soaking up every piece of knowledge they had. I was asking all the questions. I was on all the training calls and sessions and applying it to my single family business. So I already kind of got introduced to what it meant to have a mentor and what it meant to follow a blueprint. But backing up, again, I'm in the Air Force, right? I fly these, I'm a pilot, and, to become an aircraft commander or an instructor pilot, you start first being a co-pilot, and you have someone fly you around and they show you how to do it. I had an instructor to show me how to fly, teach me how to fly. So I understand that concept already, right? Mm-hmm. So I just applied it to my single family, multifamily educational experience. And so, yeah, you figure it out on your own, right? But not only you don't only just get education or mentorship, you get a network. And that's the key to these mentorship programs. You're introduced to a network of people that you need on your team to accelerate your business. It takes time to go out and find the real estate attorney, to find the securities exchange attorney, to find the insurance broker, the mortgage broker that are fully vetted and niched down into your specific asset class and business. That takes a lot of time, and your time is worth something. Wouldn't you rather pay into something to help accelerate your time, to help you accelerate your business? The net result for us was 9 months into starting this real estate multifamily educational program, we landed our first deal, a 214 unit portfolio, 99, 65, and a 50 unit. I've never done multifamily before. I had a team put together. We established ourselves in the marketplace. People knew who we are, what we want to do, where we wanted to go. And we hit the ground running. I know I would not have been able to do that on my own. And I know I wouldn't have been able to do that if I just gone on some YouTube channels and learned about multifamily. There's something to the mentorship model that you don't get anywhere else. If anything, accountability is real. Even if you're disciplined, I have a lot of coaches. Even if you're a disciplined human being, you're very structured and you have your day scheduled out in your planner, whatever it may be, how you create structure in your life, there's still something to this accountability piece. And if anything, we need to understand that we have blind spots in our lives. I learned this in the gym every day. I mean, I've been working out my whole life. I played sports. I still have a coach. And I tell you, the days that I don't have, I don't have them every day, say 2 to 3 days a week, but the days I don't work out with my coach versus the days I do work out with my, I should say, trainer, I notice tremendous difference because they can spot out these little movements in your body that it gives you the direct effect that you need. Even though I'm experienced in working out, this person still can find those gaps. So in the multifamily arena, there's going to be gaps in your business, and you don't have the time or money to make a mistake in this business. Single family, you can make some mistakes, screw up a deal, maybe be upside down for a while, but multifamily, especially when you're raising hundreds and millions of dollars from people, you don't have any room for error. And if you haven't done this business before, even if you're a professional in some profession going into multifamily, a lot of people come from, Wall Street. A lot of people come from corporate America. They're very highly skilled, professional, capable people, very, very good people. But listen, there's a lot of gaps in this business simply because you haven't done it and you don't know that are sleeping there. And you don't want to fall into those pits. So that's why I advocate joining a good mentorship program.
I'm gonna do a little podcast golf clap there, so don't blow it. That was awesome. And what's that expression? You can't read the label from inside the bottle. You kind of got to have somebody looking out inside and saying, okay, here's where you're weak. Here's where you're strong. And it's so rare. I've met a couple people that do relatively large investment deals alone, but they're usually unhappy and paranoid. And I hate to say the word greedy, but sometimes they're holding on to everything for the wrong reasons. It's almost like I'm going to replace the word greed and just say it's probably a high control that they want. And I think that to go far, you're going to have to team up. Obviously, Ivan, you have strengths that are probably not the exact same as the partners you have, or your co-GPs, and depending on how you structure it. The deal that I just closed, when we talk another thing with like masterminds and coaching. So the capital raising mastermind that we're both participating in, just the cost alone, I pretty much offset this year with using the preferred in-house syndication attorney, the SEC attorney. Locally, I'm in Jacksonville, Florida. I just closed a deal a month ago, 506C, and it was a wild ride. We got it done. Great high margin deal. But the local, first of all, I had a hard time finding who the local syndication SEC attorney was. I'm not saying there are none in Jacksonville. Then I started to talk to my friends that are in development and syndication, and they started throwing out numbers that were like multiples on what the in-house rate was for the attorney that you and I have probably both used. And again, if you guys want to DM us or message us or whatever, we'll give our everyone knows my contact. I'm going to give you his later, but I don't mind sharing contacts. But I won't say probably. I know I saved the entire cost of the mastermind just on using the preferred in-house SEC attorney for my recent deal. That's just one example. So it's all about, and we could go long on the whole mentorship and coaching thing, but it's really all about how much you put into it. If you're just moonlighting and kind of watching and wallflowering and you just want to gain information, that's okay. You might be better suited for just, listen to shows like this, watch some, however you like, audio books, however you like to take in information. But when you're really ready to go and you have like concrete questions that need concrete answers, or so, you're buying 200 apartment units and you have an Excel underwriting model. And, if you don't have someone else to put eyes on it and you're not so sure about it and it's your first deal, I would say stop right there and find someone who's been there and done that. That is not the time to proceed. I started in appraisal. I'm still a certified commercial appraiser. All my initial, my early mid 20s into like about 30, I was just running cash flows on all asset classes. I feel pretty good with underwriting. However, I would never go buy a big investment property without someone else's eyes. And I don't mean the lender. I mean someone else that I trust running through and vetting, trying to poke holes in my model and my assumption. I mean, it needs to be a team effort.
100%. Yeah,
Yeah.
100%. And a team effort is right. And, if you really want to develop a business, there's various buckets that you need to focus on. In the beginning, it's acquisition bucket, deal flow, finding deals. But you also have this capital raising bucket. You have to find the capital to raise to pay for the deal. So you have this capital raise investor relations bucket. And then once you have the deal, you have to operate it, right? And then eventually at the end, you have to dispose it. So operating a deal is a full-time gig. Finding deals is a full-time gig. Raising capital is a full-time gig. And even if you're doing this business full-time, it's going to be very challenging to scale if that's what you want to do. If you want to get one deal, maybe you can figure it out and be okay. But if you want to get multiple deals, partnerships, or build a team in some form or fashion. You got to scale out that way.
Couldn't agree more. And just, I'll use a real life example. So 2018, my partner and I, Ray Adams, we're friends since law school. And we buy this building in Georgia. It's 83 units. We still own it. It's been a golden goose. Well, the circumstances were odd. It was off market. It was a old widow in Tennessee. She'd had it for a long time. She wanted to cash out. And we got it for like $11,000 a door. It's worth like 60 a door now. So, and it's been great to us. We've renovated it out of cash flow. My point is not to brag about the deal, but my point about that deal is it was kind of a one-off unicorn. Now, you can catch lightning in a bottle here and there, but what I'm getting at, Ivan, is like, that's not really a business model. Your business model, if you want to have a team and grow and like have a presence and be at conferences and be systematic, like your background from the Air Force, you're going to have to make this stuff happen. Whereas like what I did is kind of like catch can, like I said, the unicorn, the lightning in the bottle. And I've been fortunate to stack, half dozen of those, but that's not really a business model, because I might have to let 2 years go by and buy nothing, versus like if I want to assemble a team where like this guy's on salary or whatever he's on, or some commission structure or some blend, but he's got to go find properties and underwrite properties. And this guy's out raising capital. And so it's like, you can't keep that engine running and not be doing deals. You need like velocity of capital, which is a term that I've come to respect. You don't just park capital and leave it alone. You need velocity. You need some churn. But I'll pause there. I think that what I'm getting at, and I think you understand, is like, this is not a one man or one gal show. This is to do this right, especially in the space that you're in. It's a team, it's definitely a team. And if they're not on your payroll, they're at least, oh, hey, see, someone's excited about that. They're like, yes, get a team, beep, 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 beep. But, you're at least having to pay contract labor to do stuff. One benefit, in my opinion, on that is if they're truly in your team and their incentive structures are mostly on outcomes, it's probably better that they're actually really on your team, not just like a third-party vendor, with narrow exception. I felt really good with the syndication attorney we were aware of. And I felt pretty good on a couple others. I've never done like third-party asset management. I've had third-party property management. And that might be a good segue, actually. We might jump into some of that. But, I think that you have to be so careful with your time and effort allocation, because every little one of these like slices within the loaf of bread can take all of your time if you let it. I think that's a good segue. Let's talk a little bit about, you're a GP, AKA active investor. You have Anthem Capital. You raise a lot of money. You buy a lot of apartments. I think that limited partner, like your passive LP investors, I think it's easy to underestimate how much time and effort and diversity and allocation of resources there is in a day in the life of a guy like you, Ivan. I'm going to pause there for a second, but maybe peel the onion back a little bit on all of the, I'll call it stuff. I'm thinking of an expletive. All the stuff that you might have to do to captain this ship so these limited partners can jump on into the galley and enjoy their limited passive returns.
How much time do I have, man?
I know, seriously.
I live in, right?
So, I won't cut you off.
Yeah. All right. So how do I go about doing this? First of all, I'm banning the word asset manager. We're not asset managers. You're asset leaders. You're a leader. Become a freaking leader. Act like a leader. Think like a leader. Be a leader. The buck stops with you, not the property management company, not the lender, not what's going on with the economy. The buck stops with you, and that's for me to hold up myself to. That's my own standard that I'm trying to live up to. When you have this mentality of a leader, then things happen. Things happen like they're supposed to. What's the day in life of an asset leader? First of all, what are we trying to achieve? This is going from my B1 Bomber days. We always started with the target in mind, the end goal. What's the end goal that we're looking for? Then we build a plan from the goal, the end target, backwards to where you take off at the base. It's no different in the multifamily arena. What's the end goal target? To meet or exceed the projected investor returns. That is what you're focusing on. That is the alpha. They call it alpha. You're here to create alpha, here to create cash. And then you create an operational strategy that supports the financial strategy. And this is where I feel like there are tremendous amount of gaps in our industry today, because we have all been focused on financial strategy in the hunt for the next deal. And they just kind of operated themselves because we had a rising tide market. This whole time I've been saying we need to focus on the operational strategy. So I've been in the trenches understanding what this strategy looks like. Operational strategy is the property manage, the budget that you create with the property management company, understanding the mechanics of how you're going to actually execute a plan to support your financial model to hit your alpha returns. And then you develop processes and you have people on your team you use to implement and execute the plan. And therein lies your role as a leader, because at the end of the day, it's about people. And how do you become a leader? You cast a vision of what you're going to do with the operational and execution operational strategy at the property level. Everyone has to be fully informed of what the operational strategy is, top down, from the owner of the property management company, if you're using third party, all the way down to the manager at the manager level. And then you implement processes. Processes would be like on the construction management side. And it's so important as an asset leader to get the construction management piece correct in the first year. We do not have any room for error anymore. The tide is going out. Things are blowing up. You have to execute with precision and accuracy. And you must understand this. I've learned this the hard way. So I'm speaking from my own experiences, but I've figured it out. I understand how to do this now. But you must understand how to implement a construction value add plan in the first year. You cannot allow bottlenecking to happen where you delay materials, labor not showing up. And you must instill a structure and discipline inside of your construction plan to make sure you're able to deliver the units at the capacity that you need to deliver them at. If it's 10 per month, 12 per month, 15, 20, whatever it may be. If your business plan is, I'm going to take it down to 85% vacancy or 85% occupancy, 15% vacancy in the first 6 months, and I'm going to rehab 50 units and get it leased back up by summer, you better make sure you can execute that. And I guarantee there are many, many people that get into these deals that don't have that plan figured out before they buy the deal. They say, I'll figure it out after I buy the deal. And we'll get bids, we'll get contractors. It doesn't work like that. And so a lot of what I do as an asset leader is I'm managing that construction program day in, day out. And I instill a discipline inside my team for them to execute. You can't do it all. You can't be the guy looking at payables, looking at invoices. Every line item on an invoice has to be validated to make sure that contractor did exactly what he or she was supposed to do according to the scope that you agreed upon. You're doing contract agreements with contractors. You're doing cash flow management. You're doing draws with the lender. You're making sure your vendors get paid on time so they don't put a lien on your property. You're making sure the payables are getting paid for. I mean, just in that right there is a full-time gig. And you have to understand how to do that. What else? Then what we have to do is we have to make sure that in the value add process here, we're talking about saying the first year of holding a property, going through the value add program, you're implementing the rehab plan, you have all these moving parts going on, and you have to make sure if you're the one helping manage the construction process, which by the way, personally, there's a lot of strong property management companies out there. A lot of them advocate that they have a construction arm and that they can execute the plan. But I've found that the best way to get the best results is for us to take the construction management piece in-house. And I have an in-house team that comes and they live on my property. I have like 7 or 8 crew members on a full rental plan living on my property. They work Monday through Saturday from the break of dawn all the way to 7 o'clock at night, Monday through Saturday. And they're not going and dating any other property. Like they're only married to my property. There's that thing there, understanding what that is. So they're solely focused, and you're driving the freaking boat through in this whole thing. And you got to be a leader, man. And this is where, like, you know, like in the Air Force days, we just get shit done, man. You know, find a way, you got to get it done. And you got to feel the pressure of that. You have a fiduciary responsibility to execute. Your investors are trusting you to execute. And it has to have that level of seriousness because it is serious, this business. These people have given you their lives, you know, and I don't take that lightly. And it pains me when sometimes we don't execute, you know, but at the same time, let me talk about what else we do. When we don't execute, we understand why. Do a root cause analysis. I'll do a little bit of teaching here. Root cause analysis. You understand all the contributing factors of why you didn't execute something. Why did we deliver 10 units in the month of May when we only delivered 5? And we understand contributing factors. Well, the materials weren't there on time. Why weren't the materials there on time? You drill down, and then you determine what the root cause is of why you were not able to deliver 10 units. And then you come up with a fix. You identify that one root cause, you come up with a fix, you put that fix in place so it won't happen again. You have to have that, again, discipline in your program in order to be able to execute. Now, just one little example. Anything you want to unpack? Because I'm going to rip.
You are ripping. I'm hesitant. You know, I'm going to get like shot down by the Air Force pilot. I mean, you're tearing it up, man.
I'm very like this is so critical, and I mean this, and I want to share this with the intention of helping us, all of us as a community, to understand what we need to do in the next season to create alpha. We were spoiled. We had natural growth. A lot of people executed. They screwed up the deals, but they still sold the properties for amazing amounts of profit. That luxury is not here anymore. So what I'm sharing here is how we are going to be able to get through this next season and how we should operate our businesses anyways from this point forward, right? But
yeah, I mean, we're going to see. Yeah, I mean, we're definitely going to see as the tides already kind of going out. It's going out in different ways, but you're starting to see who's pantless, who's just been standing there waist deep with nothing on there, just their birthday suit. And no, you're right, because to say it plainly, if rents go up organically, for 10 years plus, and cap rates just keep sliding on down, even without an Excel spreadsheet in front of you, you don't have to do a whole lot to make. Well, you didn't. Let me say, have to do a whole lot to make a lot of money in multifamily. Not to mention, it was the most coveted asset class. So not only do you have a high desirability organic rent growth and plummeting interest and cap rates, I mean, you didn't have to, pulling a rabbit out of a hat wasn't super difficult. I was going to say the other asset class would probably be industrial. But nonetheless, now I think what you hear, like the passion in Ivan's voice, you have to do it right. We're in a little bit, dare I say, kind of static market. I mean, it's obviously there's things happening all the time, but now you have to like actually buy it right, improve it on time and at or under budget, and probably leave room for like some negative slide possibly, instead of just waiting on this up cycle. And then when it does come time to refi or sell, you're going to have, more prudent, really reasonable buyers that aren't, if they're still in the game and they're looking to buy the asset you're renovating today at the time of recording, they're not going to be, I know we were bragging about coaching programs earlier, but they're not going to be some jokers that just came out of a weekend course ready to take down their first 200 units. It's not going to be that group where it might have been a year ago. You were on a tear. I don't want to pull you off too hard there. I mean, this day in the life of the active investor, maybe I won't say asset leader. Maybe that will be the title of this show, but I mean, asset leader. And I felt like I was looking at like Jocko, extreme ownership. Like you had it, man. I have a feeling you've read that book, but I mean, fully embracing the outcome. It is on you. I was like getting goosebumps. It was awesome.
Yeah, man. I get a little fired up, but it's, these are lessons I've learned myself. I'm speaking from my own experience. Life throws you in the fire, and sometimes the only way out is you got to climb your way out of these things. And so I'm sharing from my own blood, sweat, and tears when I'm talking here. Okay.
Mm-hmm. You are. And we appreciate
it. Thing is, these mentorship programs, they're not going to give you the blueprint, man. They're going to give you the hype of getting your first deal. But once you own it, then what? It's not that program's not there. And I can share more on what I can do to help people in that arena later on. But all right. So that's just one little piece of the construction management side of what it is you do as an asset leader, making sure that engine, that machine is running correctly. And then make sure you're marrying up the deliveries of all of these units and marrying up the exterior and the office, that whole program with the property management company, so they are working together. And again, that's where your leadership piece comes in, because you're the one at the top marrying them together and making sure they are continuing to communicate to one another, talk to one another. Like rifts happen inside of a construction project. People get pissed at each other. People start to not like each other. Things get miscommunicated. There's logistical issues, and you have to have enough wherewithal and awareness to understand this, to make sure those things don't happen, to prevent bottlenecking, right? And I saw this in the B1 days, my whole life of maintenance was producing jets. We wanted to go fly them, but we needed to make sure that we knew they are going to be able to deliver the jets when we needed to go fly them. There's this marrying process that always had to happen, the same at the property level, okay? Your job as a leader is to make sure this happens. Then whatever is happening with the construction management is reflected on the property management side. One little thing would be whether a unit is available or not. And all these units are getting delivered, but if the property management company doesn't know, is not reflected on the availability report to say these are rent ready and available, they're not going to get marketed. And they're sitting there and nobody knows. It's like these simple things that are happening in our business because we don't have systems and processes in place to manage that. The systems and processes manage it. You lead it. Okay. Now, KPI calls. So how do we cast a vision? We have the budget in place, which creating the budget, that's a whole nother topic with the property management company. That's the operational plan. That's the expectation. You put it in place. Then you have to measure the outcomes with KPI calls, key performance indicators. And I have my own sheet. I have my own tracking system. And I go in and I review all my reports: availability report, activity report, rent roll, income statement, T12. I look at, I want to manage how many units I have renewing throughout the year, so I can have the most of the units renewed during the summer season, the peak season, and then lesser units renew in the winter season when leasing slows down. You're managing that process and leading the people to do it, right? But on these KPI calls, we have a system where we're tracking every single data point, not only through the reports, but I have my own sheet where I'm tracking the data point and I'm watching trends. And this is you as a leader, you know what the target is looking ahead. You know where you are today, and you're seeing roadblocks that may be coming your way. And it's your job to have the wherewithal to prevent those roadblocks. One example would be delinquency. Not just how much delinquency I'm having, which means people are not paying rent, which means we're probably bringing in bad tenants, which means maybe a marketing system is wrong or rental criteria, something's wrong there on the front end. Delinquency, but the rate of growth of your delinquency. If it's 5% this month, 5.5%, 7%, 8%, 10, 12, 15%, 20% delinquency, and you see this delinquency start to increase, like, don't ever let it get to up here. You're nipping that thing in the bud and looking pinpoint at every single delinquent tenant, understanding why, and make sure you have a plan in place to manage that delinquency piece there, because it will have a direct impact on your ability to raise the revenue. You may be 93% occupied, but you have a lot of delinquent tenants. Your economic side is in the mid 80s, and you need to understand why and how to prevent vacancy loss. Two big things that will kill a deal: vacancy loss, which is usually driven by a poor construction program, and then delinquency. Bringing in bad tenants, it's like this dead weight that's sitting in your property, the sleeper cell, and all of a sudden it all hits the books, and you're evicting all these people. And then guess what? Now you have higher turn costs. Now you have more vacancy loss, and you did not hit your projected pro forma returns.
Mm-hmm.
So you have to be able to look ahead and understand the roadblocks and make the adjustments today. And that's a lot of what you're doing as an asset leader.
I was a poor asset leader a couple of years ago. We were leaning kind of hard on property management. I took my guys from Jacksonville and took a little CapEx crew over to Georgia where my 83 unit is. And we just got them cranking, and we got a lot of units up. And then it was like, let's lean a little bit harder on the property management. We never said to like dramatically change your criteria for leasing, but we were like really pushing on like getting that occupancy up where we wanted it. And right to your point, we ended up with some delinquency issues. It would have been way better to just leave those units ready on the shelf, leasable and empty until we have the right person, because you already know where I'm going with this. Now I've got a unit that was ready. Now it's occupied by some, dare I say, clown or deadbeat. But I mean, we had people they're banging up the property. They should have never been in there. And now we got to get them out. Even if they don't leave by way of eviction, this property is in Georgia. It's a little bit easier to get people out, or cash for keys. We that's not the topic here, but we get them out. Well, now it's damn near a turn again. I mean, it's not everything. We got holes in the walls. They left on bad terms. If it had carpet, which we're trying to, eradicate, but carpet's probably shot. So we would have been way better off just leaving it empty, taking our time, than bringing people in a rush, banging up our newly turned units only to have high delinquency and have to bump them out later. Yeah. That's
the vicious cycle. But our job as asset leaders to not let property management do that, because they're under pressure, and these people kind of sneak in, and then you may not even know it because you're not watching delinquency closely. For me, other than visually looking at when most of the people pay, beginning of the month, end of the month, that's kind of another indicator. And delinquency, that rate of increase will tell me there's something going on, and I need to nip this in the bud now and fix it. And I fell into that trap before, and so to me, that's one of the indicators that we really need to focus on to like you said, to make sure we don't get into that problem.
Mm-hmm. Well, I was thinking about, before you came on, the role that you play much more actively than I do. I feel like it's changed a bit recently, or it's evolved, and maybe you don't agree. I didn't prep you on this. I'm just throwing it out there. But do you see like a change or an evolution in the role of like the GP sponsor leader? Just things that come to mind. I mean, we've got, in no particular order, general fear, from the passive limited partner environment, unrealistic owner expectations. You've also got to couple that with the fact that a lot of things are just changing online, like the way people are taking in information, how you're onboarding investors. Here we are on a podcast. Obviously, we're doing this for some reason. So it's like, I just feel like there's been a lot of change, even since some of the stuff that I bought in 2016, 17, 18, or I just was unaware of it back then. But any thoughts on just kind of the evolution of the role of the sponsor, the leader? I mean, to run something like Anthem Capital, your company, it probably takes some different skill sets and efforts than maybe it would have taken, 5 years ago.
Yeah, I mean, I now more than ever, I would lean on someone's track record and experience, and not to discourage someone who wants to get into this business, though. That's where partnerships come in and learn the ropes for a while. Be a protege before you take these things on. I got lucky. I got in 2016. The market was rising, man. I screwed up some deals and I still survived and live to tell about it. Fly another day, But these days, I would make sure that an LP fully vets and understands the track record and experience of a GP. And then what I am trying to advocate is to help LPs understand the operational components to a financial plan, and make sure that they understand operationally how this plan can be implemented to validate and verify if the GP understands how they're going to validate and implement it. So to answer your question, LPs these days, and this is my mentality from day one, though, but you're not really an LP. You're kind of active. You're not a passive partner. You're an active passive partner, because you do have to take a vested interest in understanding all of the components as if you're doing it yourself. Personally, this is me speaking, before you would invest in a deal. That means your own due diligence on the general partnership team, asking all those questions that you need to ask, your own due diligence on the deal, and understanding the operational implications to make sure they can achieve the financial strategy. Once you have verified all of that, then you have clarity and comfort now to invest your dollars into a deal, versus then just throwing it there. Oh, they're good. The market's strong. Everything's good. And then we end up where we are today, where unfortunately we're experiencing friction because of these extra steps that we need to take of doing our own due diligence may have not been taken.
Yeah, and
does that answer your question?
It does, because I mean, I think that kind of centers around the current climate portion of the question, where it's like, that really speaks to just, if you're going to be a limited partner in 2023, we're recording this like late spring, early summer, depending on when it comes out. But yeah, you probably need to do a little more homework than you had to do maybe even like 2 years ago, because I believe Ivan's going to hit his numbers. I believe I'm going to hit my numbers. And even if like and trust us, which is generally the doorway into investing with guys like us, you still need to do your homework. What do you know about this? Have you ever invested in this asset class? If you haven't, that's okay, but you might need to do some homework. Or if you don't know anything, you might like and trust us from a conference or a podcast or a meetup, but look at the last deals. And I think another thing and it's quite straightforward, but I mean, talking to other limited partner investors that have invested with us before, that's in the beginning, it's different. They were private lenders. So I was taking private mortgages for relatively simple deals, but still have we taken money, used it, and given back more on the timeline we promised, with the returns we promised, whether it was a private note and mortgage, whether it was an LP waterfall, either way. And I think those are simple questions, but critical. And I think now more than ever. Also, my one little tidbit: this is media. We're on a podcast. It's also being recorded. You'll have clips on social. That's good. I like doing this. I like getting the exposure and bringing these messages to the audience. But one thing to watch out for: there's so much competition for your eyeballs, earballs, and attention right now. It becomes overwhelming, and it's really hard to sort things out, I think, for just like the consumer of this entrepreneurial information. And here I am. I'm putting more of it out. I mean, I like our message, but I think that there's like a caution sign. Like imagine like a yellow triangle right now. Be careful. Everyone's trying to get your attention. And it's part of why I like the podcast format. Ivan and I can chat for an hour and we know our stuff. Hopefully you do. Versus like I'm not like saying cute things about investing while dancing on TikTok or whatever. I just hope people can see the difference.
Let me comment on that. I heard maybe a simple way to explain this the other day from Alex Hormozy, who I don't know if people know who he is. He's big on social media. He's big, and you look him up, and he's done a lot of good stuff in business. And he said it's simple. He said, do the stuff to know the stuff, and then talk about the stuff. People are gonna know who the ones that have done the stuff because they have the experience to share versus the ones that are making it up. You can sniff that out. Mm-hmm. So I would sniff that out. It's simple. Has this person done stuff yet? And if not, then some more questions should be asked if they're going to invest with them.
Yeah. And I'm biased, but that's why I like the podcast format. It's just so much harder to BS your way through a podcast format or an interview. I mean, you've been a killer guest, Ivan. It's like, it would be clear if you didn't know your stuff. It'd be clear if you were just reading from someone else's script. I mean, so I think that, our whole human evolution, we've been trained to catch stories, learn lessons, through audio, it's like, and visual, and you can get both. Most people are just listening, but this just strikes the human core as authentic. And I think that I'm actually trying to disengage a little bit more from like your, whatever you want to call it, like your traditional social media. I kind of consider this different. This is more like just educational, versus like I don't use Snapchat, but my daughter does, and Instagram. We have Facebook, TikTok. I mean, if it's even still around, but I think that that's just entertainment. And I know we're both on some of these platforms. I think LinkedIn has a little more gravity to it. We have a pretty well-made Instagram account, but I like interacting people with on there, but I don't tend to find like that to be a great resource for getting like limited partner investors. It's more of like entertainment, personal branding, and awareness, which is a different game. What we're doing right here is truly deep diving and educational. And I think a listener can, if they didn't learn something from the hour we spent together, then they were distracted. So, all right. Well, as we kind of bring it closer, to the last, we're in the red zone here. Yeah. Do you want to dive into, I didn't prep you on this because I didn't prep you on anything. Do you want to dive into a sample deal? If you don't have notes on it, we'll just pretend. I'll ask Sam to edit this out like it never happened. But if you have a deal you want to break down just as a sample of what you do, that's cool. And if you don't, we'll rock on.
I got a quick case study.
Okay. Hit me with a case study.
All right, here we go. Bought 110 unit property in Oklahoma City, 2017, 110 unit for $35,000 a door. Those were the glory days.
Ooh.
We had a full renovation plan. We did our whole comp study of what we thought the scope was going to be to renovate the interiors. What I loved about this property is that it was one owner for 30 some years. He built the property with his own hands. He had in-house property management for 20 years when we bought it. Her name was Andrea, and she's still there today. She ruled that property with an iron fist. Her delinquency was less than $5, not 5%, but $5. Talk about solid. We get into the property. We had a full rental plan, but we always test the market to see if we can achieve our pro forma rent bumps with a limited amount of rehab. You're infusing capital dollars to create a net effect, not to make the property look pretty, yet that is important, but ultimately, does it create more dollars in the bank account? And we tested out, come to find out, we can achieve $150 up to $200 rent bumps without even touching the property. Because a lot of these owners that own properties for a long time, in-house property management, sometimes they're more focused on physical occupancy than economic. As long as it's full, they're happy. And he built it with his own hands. He didn't have debt. It felt different for him. He's still making money. We took it over. We improved the economic efficiency of the property by pushing the rents and still managing delinquency. And we were able to achieve that easily with that property and preserve our capital to use it for other things that did come up. We had roof replacements we needed to do that wasn't originally underwritten, which we did have extra capital for but overall we had a conservative approach in the overall plan when we're executing the operational plan. However, check this out. So the huge common area in the office area, and then she had a small office. We decided to convert the common area to an extra unit. It was 110 units. We spent $40,000 to put in a 2-bed, 1-bath unit with a washer and dryer next to the office. Everything was brand new, $40,000. That extra unit earned me an additional $800, $850 a month in revenue, which then improved the value of that property by order of up to, we spent 40,000 and it was worth, say, 150,000 greater just on that one unit. Talk about success story.
Yep.
So you look at how to add value. That's how you add income stream, right? And we capex the cost to create that extra unit, which did not hurt the bottom NOI line, but improved the NOI and improved the value. Fast forward, we sold that property, which cash flow, we hit projected performing returns month over month. We sold it 4 years later for $65,000. Bought it for $35,000, sold it for $65,000. We had over 100% total return. It was a 2x deal, and that was one of the success stories. But from an operational standpoint, it was what I wanted to point out through this case study of how you create value out of property. Now, let me talk about Andrea at the people level. Andrea she lived on site. And if you can get a manager to live on site, it's a totally different experience because they treat it as their own. And if they have kids, they want to have a safe place for the kids to play in. So they even treat it even better. But she treated it like it was her own property. And we were a little concerned because she lived under, she worked under one owner, and then she came in under a property management company, and she had to inherit this culture that she wasn't a part of, and systems and processes, and wear the company shirt and all of this. Yeah, but she did great because part of it is we created a relationship with Andrea, and I created enough trust with the property management company for them to let me have access to their employee. You need to understand this. Andrea is not my employee, it's the property management company's employee. Typically, property management companies don't allow direct access to property manager because you're not there to micromanage. You're not there to tell them what to do. The property management company's job to do that. You must respect that. But I live in the same city as the property, and I want to stop by and I want to ask her what's going on, and I may have issues to work through. I make sure the regional knows, and then I go and talk directly to the property manager. That human interaction, that's where that leadership piece comes in, creates this community experience as a team where we all feel like we're adding value and we all winning and we all get to celebrate the win. And yeah, there were challenges too. Don't get me wrong. There were leaks and this and that, and there's these other things that we had to navigate through. But because we established a relationship and I respected the position of the property management company and their authority in the overall team process, we're able to even create more alpha for that deal. That's what I learned in that experience.
No, I think that's a great case study. Thanks, Ivan. And so, just the last thing I usually ask on the breakdown, you already talked about find, fund, fix, exit. All that was great. What would you say your biggest takeaway or lesson was from that one you just broke down?
That one, greatest takeaway, greatest lesson. That's when I truly learned the value of having a property manager live on site and understanding their personality. She was a stickler, man. It's just like kind of sometimes challenging to talk to if you can see through that. You may not feel comfortable talking to her, but maybe you want that person managing your property.
For sure.
That was you got to understand the personality types of managers to make sure they're the right personality type to manage your property. So that's, I was early in the game then, and that's when I kind of saw the importance of all of that.
Yeah, you actually, I hadn't thought about this in a long time, but I sold 40, give or take, units in Jacksonville, and they had maybe 18 Section 8 and HUD tenants kind of scattered. They weren't all contiguous. And I don't own them anymore, but in hindsight, I had the best property manager because I had one of the only guys in town that had an established relationship with the housing authority. And I don't know if you do Section 8 and HUD or housing authority deals, but those vouchers, as you know, or maybe you don't, in between when you're leasing, they have to come do a physical site inspection. I don't even know if this is like up and legit, but we had such a good relationship between my property manager and the local field guy from the housing authority. They would sometimes text photos or have enough trust to where it's like, he walked it. He told my guy, I need this window fixed, this blah, 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 and the window unit air conditioner. And my guy would literally take his phone out, photograph it the next day when it was done. And boom, we were green lighted to put in a new tenant. For the rest of Jacksonville, that might have been 2 more weeks. And if you fail on some other little thing, there's another 2 weeks a lot of times, or 10 business days. And so, but to your point, that made me think about it. Having the right person or personnel for the right asset class and location is everything. You're assertive, live on site person. Sounds like she was perfect for that asset.
100%. You nailed it on the head.
Cool.
And she understood those relationships with the city officials to get those things done when you need them to get done. That's so key as well.
Local government stuff can be everything. All right. That's probably another podcast. All right. Well, I'm going to hit you with some closing questions, slightly rapid fire. What is your favorite or most impactful real estate or business book that you would recommend to the audience?
Whew. Oh man. Limitless. I'm reading Limitless right now. That's a good one. Understanding the mind and how you can improve the productivity in your life and sleep better and become an overall better human being. I'm really learning a lot from that book.
I haven't read it, but you're already exuding this Limitless vibe. So I'm sure it's just going to dial you up to 12. I like it. What do you do when you're not smashing your professional goals?
Honestly,
something for fun. I know you've got some fun in that.
Yeah, well, I have boys, right? I have 3 boys, right? And so all the family things that come with that, which I enjoy doing, taking them to sports. We do a lot of hunting, we do a lot of outdoor sports kind of events, hunting, fishing, but we love to travel, man. Probably won't be traveling too much this year. We're moving into a new house, so busy with that and get established. But last year we went to Spain. It was amazing,
Very cool.
So I like to take our boys on cool experiences like that.
All right, man. I know it sounds cheesy, but they're lucky to have you. That's awesome. All right. What is your, I call this the huddle up yield coach best advice for entrepreneurs. If you want to drop one last nugget, kind of like your critical wisdom nugget, hit me.
The one thing that I think has made the biggest difference in my life is knowing what you want for yourself in your life with absolute clarity, where you feel it, you know it, you can recite it with utmost certainty in your life, and then commit to that. I had a lot of career decisions I had to make along the way where I knew that if I went this way, I wouldn't be colonel or general. And I knew I couldn't do it all. But meanwhile, over here, I'm building a real estate business that I knew would create the life that I truly wanted for me to be fully expressive in my true identity. I feel right. And that's what we all deserve to have in life, is to feel right in what we do on a day in, day out basis. And that started with clarity. I know a lot of people may want to transition into this world, but they're scared to let go of that paycheck or, take that leap and that chance, right? But I'm telling you, like, God, the universe, whatever it is, rewards you for that risk. Once you have clarity and you commit, it will happen. As long as you understand who you are and commit to that, day in, day out, put your daily drops in the bucket, it will happen. Trust that.
Man, that was awesome. Remember at the conference in January, Jesse Isler talked about you will almost never have regrets when you empty the tank. That was his thing, emptying the tank. Good, but it made me think about it when you said that. It's like you have to have the vision, like you said, and you have to truly commit and go for it. I think I'm just speculating, but a lot of people, they have like ideas, or let's call them visions. Maybe they're vetted out. But if you don't go like hard at it and like empty the tank, you're probably, you're going to be full of regret if you don't get there. But if you do empty the tank, even if it doesn't work out, and I think you're right, I think the universe does reward you for like emptying the tank and going for stuff. But let's say you don't get there, you're unlikely to have regrets, and you're very likely to have learned lessons and figure out where you're going next when you go all in.
Love it. That's it.
Awesome. All right, everybody. Lastly, where can I connect with Iven, learn more about Anthem Capital?
I tell you what, I shared a lot today on asset leadership, and I'm going to share. I share a lot of my tools, tips, and tactics in my Facebook group, Apartment Ninja Warriors Facebook group, and I want to share more there to help people learn how to operate apartments like a pro, or learn how to validate a deal as an LP to understand that they can get the correct return on their investment as well. Apartment
Awesome.
Ninja Warriors.
Apartment Ninja Warriors Facebook group. Do you use that on any other socials? Apartment Ninja Warriors?
The Apartment Ninja Warrior on Instagram.
Okay. Awesome.
Iven in LinkedIn. Iven Vian.
Yeah, actually, I follow you in LinkedIn. You got you're putting out all kinds of cool stuff. I will say it's probably the algorithm just like playing with me. But before you came on the show, because I saw you in January, and here we are recording a handful of months later. I was like, man, Ivan's everywhere. You're like, Ivan's on fire this year. And maybe you were already on fire. Maybe just AI is like just putting you in front of me. But I'm like, you're like omnipresent in my, at least in my insulated world. So very happy for you. I think you're seriously going places. So proud of you.
Appreciate you. Thank you for your time. It's been a pleasure to be on the show, and I'm very grateful to be here.
Awesome. All right, everybody. If you enjoyed this one and it was a great one, share it with a friend. There's people that can benefit from this that are not hearing it right now. Share this episode with a friend. Give us a little follow, rate, and review. It makes a huge difference. Allows us to bring you better and better content. If you're into the socials, you can check us out on the Yield Coach Insta, Facebook, YouTube channel. We do have a TikTok, but don't hold me to it. We get a little crazy on there sometimes. But for now, that show is a wrap. I'm your coach, Ian Brown, signing off and reminding everybody to lace up and leave it all on the field. Yield Coach out.